Let's start with accountability, something you won't find in most crypto channels. Yesterday I highlighted that Kaspa's volume remained anemic, and guess what? I nailed it. While other analysts were screaming about breakouts, I told you that light volume meant fewer traders were chasing KS, making any explosive move unlikely. The numbers don't lie. We're seeing roughly 102 million in trading volume against predictions of 118 million. That 14% shortfall tells us retail isn't flooding in yet, which actually creates the perfect environment for smart money accumulation. But here's where it gets interesting, and this is what separated our analysis from the noise. Open interest remained relatively stagnant, meaning traders are still engaged but not over-leveraging. This is crucial because it suggests we're in a consolidation phase rather than a capitulation event. The positioning data revealed something fascinating. Net longs continued sliding while shorts maintained their stack around 1.19 billion. On the surface this looks bearish, but dig deeper and you'll find the real story. The short to long ratio isn't extreme, which means we're not seeing panic selling or euphoric buying. We're seeing methodical positioning. This measured approach from both sides creates what I call compressed volatility. And when that spring finally releases, the move tends to be swift and substantial. Based on the confluence of technical and fundamental factors, I'm tracking 3 distinct scenarios for Kaspa over the next 48 hours. Scenario 1, the bounce play support holds at 8.1 cents, triggering a relief rally toward 10 cents, probability 40%. This scenario requires volume expansion above 120 million and net long positioning to stabilize. The rally would likely stall at previous resistance, but it could provide 20 to 25% gains for tactical traders. Scenario 2, the breakdown. Support fails, accelerating the decline toward 5.5 cents. Probability, 35%. This would likely trigger stop-loss cascades and force additional long liquidations. While painful for current holders, it could create an exceptional accumulation opportunity for patient investors. Scenario 3, the squeeze setup. And this is the one that could catch everyone off guard. If support holds and we see a sudden spike in volume with short covering, CAS could blast through 10-cent resistance toward 12.5 cents. Probability, 25%. This scenario requires short-term bearish sentiment to reach an extreme, followed by a catalyst that forces rapid repositioning. The key variables to monitor volume expansion above 130 million, net positioning shifts toward neutral, and any fundamental developments from the Kaspa ecosystem. Here's how sophisticated traders are positioning for these scenarios. For the bounce play, entries near 8.1 cents with stops below 7.8 cents provide reasonable risk-reward. Target the 9.5 cent area initially, with potential extension toward 10 cents if momentum sustains. For breakdown traders, waiting for a confirmed break below 7.8 cents with volume could provide entries for the ride toward 5.5 cents. However, this approach requires discipline. Failed breakdowns can reverse violently. The squeeze scenario is the trickiest to position for, but also potentially the most rewarding. Watch for short-term capitulation signals followed by sudden volume spikes. This typically happens when sentiment reaches an extreme and smart money steps in aggressively. Position sizing becomes critical in this environment. The volatility potential means smaller position sizes with wider stops, or larger positions with tighter risk management. Never risk more than you can afford to lose on any single trade, especially in a market showing compressed volatility patterns. Warriors, if this multi-scenario analysis is helping you navigate these choppy waters, that subscribe button needs some attention. Crypto strategists, Kaspa sits at a genuine inflection point. The technical setup, positioning data, and volume patterns all point toward resolution in the coming days. Whether that resolution favors bulls or bears depends on how this 8.1 cent support zone performs under pressure. The beauty of having multiple scenarios is that it prepares you for any outcome. Markets rarely move in straight lines, and successful trading requires adaptability rather than stubborn conviction. I genuinely appreciate you investing your time with TJ Crypto World today. Your engagement in the comments section drives these deep dives, and I personally read every response to understand what analysis serves you best. Before you navigate away, check out our comprehensive altcoin rotation strategy guide. It's queued up right here and perfectly complements today's CAS analysis. Understanding how capital flows between different crypto sectors could be the edge you need in this market. Until our next session, keep your risk management tight, your analysis objective, and your positions sized appropriately. The markets reward patience and punish impatience. Make sure you're on the right side of that equation. Catch you in the next breakdown, strategist.